Thank you, everyone. Thank you, everyone, for joining. My name is Nick Frassi, product manager for SMH and SMHX, and I am joined by Angus Shillington, lead semiconductor analyst, for today's Q3 2025 webinar call on our series of these. So today we're going to talk about AI driving demand, Nvidia earnings, and then where we think we're at in the semiconductor cycle. We're going to try to place this in the context of our funds, SMH, which is the broad semiconductor ETF, and then SMHX, which is focusing on just the fabless names. And I'd be remiss if I didn't shout out the infamous Van Eck intern for our cool new Semiconductor Society hats. So thank you for that. So let's get into it. I guess, Angus, how has your conviction changed from last quarter's call to this quarter's call, I guess broadly?
I don't think it has. Last quarter was an inflection. We had talked about sort of concerns about ASICs and some competition for Nvidia specifically, but that benefited Broadcom. So, in the broad context of SMH, it's sort of a wash. I saw, and we talked about a big inflection in demand that was partly sovereign AI and partly just competition from OpenAI suddenly creating urgency. So I don't think it's really changed that much. I'm seeing tightness in the supply chain. You put together a couple of slides, maybe just throw them up quickly, because I think it's sort of interesting at this stage just to make some points around that, because I think our overall, there's one big overall takeaway we'll get to at the end.
Sure.
So, I mean, basically, I think it's important, semiconductors have driven innovation for decades, right? And AI is no real different. So, if you think about, internet came in and, driverless cars, they're all kind of the same thing, right? The demand for semiconductors never lets up, right? It doesn't matter whether it's AI or internet, or it's just a reality. So I think we want to put that in context. And the next slide, what we tried to sort of get to was this idea that people think they're insanely cyclical and terrifying and dangerous. And there's a point which I'll get to in a sec. The reality is that the cyclicality was not in the semiconductor demand, right? And if you look at semiconductor unit sales, it's even tighter than the revenue. The cyclicality was businesses competing with each other, right? So like Five Guys made the same thing. In good times, they tend to overbuild, and any sort of slight change in demand profile, they'd be left with a ton of inventory. So the cyclicality was in the competitive nature of the business, not actually in the semiconductor demand itself. Now, what's happened most recently, and I think this is just the point of this, and we can throw it down in the next slide, is we're in an area now of tech monopolies. Now, AI has largely done that because the top of the stack, no question, is now Broadcom and Nvidia. And as you roll down the stack, and if you think about that as SMH broadly, they're all monopolies, right? So what we've got, or duopolies, we've basically got monopolies on monopolies on monopolies. And what that will end up doing is it will lead to much more concentration, obviously, much more capital discipline, and a lot less competitive volatility within the stock. So you're already starting to see that. So one of the big takeaways is going to be we're at the era of now monopolies. Number two is just extreme discipline, right? And one of the big takeaways, if the RISA changes, we're now starting to see discipline really tighten up in the supply chain. So think about TSMC. These guys are saying, one, these are big numbers coming in. We don't want to overbuild, and we don't really have a competitor. So, we don't have that pressure. And then the second point is that, they've got some geopolitical risks. And I think the worst thing they could do right now is to underestimate that. So not only are we seeing demand pick up across the board in both Broadcom and Nvidia's businesses, you're also starting to see, no corresponding sharp increase in CapEx from TSMC. So everyone's margins are going to run hot. And this thing looks pretty healthy going forward. So that's really so I had a sort of inflection in terms of sort of becoming much more confident in the longer term of Nvidia Broadcom, and then now just feeling like the entire stack is tight. I think
Yeah.
that would be the big takeaway, and you can drop those slides. I think.
Yeah, for sure. I think that's super important because I think a big topic of conversation is, and question for investors largely looking at the space is like, how much longer is this going to run? And the big conversation is how much longer can hyperscalers continue to spend? But it's not all just about their spend. It's about these companies doing a better job of managing the supply chain to help create long-term demand and make sure that they don't overbuild, right? And I think that's a really good takeaway, and I like that. So just to recap, maybe between what we've talked about and where we've been over the last, we've been doing these for now 3 years, but what has kind of what played out as expected, and then maybe what surprised us from a timeline perspective. I think AI infrastructure spend, like we just talked about, has continued to accelerate, and we kind of had that perception early on that based on the transformative nature of the technology, that we thought that could be a real possibility, and we saw that come to fruition, and it's continuing. And I guess we would probably argue we're not that far along in this super cycle, right? We're continuing to see compute demand ask for more GPUs, right? So the more money you spend on GPUs, the more compute you get, the better these models get, the better AI gets, right? On top of that, the ASIC chips, right? Application-specific integrated circuits, Broadcom especially gaining traction alongside of GPUs and Nvidia. I think that was probably a big conversation that people were concerned about, is like, who's going to take Nvidia's lunch, right? And maybe we kind of had that perception early on, but we now understand maybe how deep of a moat Nvidia really has to the space as a whole. But that other chips, because you have this group of winners, can work alongside Nvidia, and we've continued to see that kind of evolve through the last. And then the shift from one winner to a diversified set of winners, right? I guess does that encompass pretty much every? I think that's captures most of it.
Yeah, I mean, there's a lot of energy on trying to sort of call the top on this. Like,
Yeah.
first of all, if anyone's been calling the top for the last several years, they've got to be out of money by now. But I guess they're still on X. And I think one big point here is, like, you got to remember when you're trying to forecast this space that not only are the expectations dynamic, meaning like what are the growth numbers in the out years, but the entire technology is dynamic, right? So Jensen Huang was very clear on a couple of points in the call he just did, which was one, NVIDIA is a systems company. It's not an NVIDIA. It's not just a GPU company, which it is, and that the biggest growth surprise there was networking, i.e., you used to just connect, one GPU node to another one. You now connect, racks of GPUs as one node to another. So this thing is progressing at such a speed. So the danger is always like looking out with the binoculars, where one barrel is focused on, scary growth numbers, and the other barrel is focused on what I know today. That's wrong. You got to focus them both at a point in the future, and that it's we can sort of go into that a little, but I think that's where things get problematic. I don't see either barrel slowing down at all.
Sure. Yeah, it's very hard, and I think
probably.
Yeah, and in that same vein, and I know you're probably tired of hearing me tell this, but I think only because I hear it from clients and I hear it from our team as much, is that I think a lot of people are maybe still snake bit from the .com crash, right? And the super build out that they had with the internet, and then you have this big bust because there was this overspend on infrastructure, right? And I think people have to wrap their head around that, although they may rhyme and that they were both transformative technologies, the internet was more of a global marketplace coming online for interconnectivity from a global standpoint, whereas this is more akin to an industrial revolution where we're changing the way that we work. On top of the fact that a lot of the infrastructure that's being built has pretty short upgrade cycles, right? And a lot of these hyperscalers need to continue to upgrade as well as the build out of new, right? So I think that's important to keep in mind. Not to say that we're not going to have pullbacks, not to say that at some point there can't be overbuild, but I think it's important to understand it in the context of maybe a larger, broader picture, and try to keep in mind what has happened with what the future of this technology could be. So I guess there were things that maybe surprised us along the way as we've been doing these calls. Monetization of the application layer slightly faster maybe than we expected, specifically from each of the hyperscalers that were employing their own different models, and then hyperscalers diverging to their own strategies pretty quickly. I guess anything else that surprised you from the last call till now specifically that stands out?
Um, I mean, there's a supply side sort of discipline and constraint, which I talked about. But maybe I'll just sort of jump on one thing you said, and I think you said it right, but I would think about it even more simply. Look, we built out Internet 1.0, right? As it was sort of Broadcom and WorldCom and all that kind of stuff. It was heavy infrastructure, and then the applications came several years later. The infrastructure for AI is GPUs, right? The application layer is GPUs. It's the same thing, right? So it is one continuous cycle of demand. It's not it's not a toggle from laying down pipe to building software. I say these are the same things. So
Yep.
I think that's where people sort of slightly get it wrong.
Sure, that makes sense. Okay, to flip, I guess Nvidia has kind of been the bellwether of the sector, obviously. Everybody is watching what they're doing, maybe broad markets as well as semiconductors. They had earnings beats again in the face of not selling anything to China. I guess what were your biggest takeaways from what Jensen talked about on the actual call itself?
Sure. I mean, a quick point on the monopolies bit, just as these become monopolies, right? More and more modes, etc. It becomes easier to look ahead, right?
Sure.
Because Nvidia has always been kind of a good health check on the sort of Moore's law of GPUs and AI build, but you can actually cross-reference that. So the only guys who are making their chips for all intents and purposes TSMC, and the only guys making their memory are Hynix. So you can triangulate what they say with those guys and cross-reference it pretty well. So it's solid. Point one. Point two, he went to spend a lot of time on agentic and thinking. So as the models think more, right, it just supports these two vectors of growth that demand a lot more compute. So one is thinking orders of magnitude more tokens use, and then efficiency, right, is the value proposition they give to their customers. He was very emphatic about that. So one is just the more this thing ramps, the more demand is on tokens, meaning the more compute's required, but also
Sure.
the speed of the product cadence, and they are one product every year.
Yep.
Each one becomes it becomes massively more efficient for a hyperscaler or whatever to buy to reduce power to increase efficiency. So the two of those working in tandem are just they're there. I mean, that's just a reality. I want to say the summary beat expectations, and that was sort of in a geopolitically volatile situation. But you take out China, they still beat with guidance. Blackwell is ramping faster than expected, which is awesome. And I think really sort of all around they set guidance with a high floor and with a flexible ceiling. Again, just talking to the fact that this is probably moving forward. But I've made one kind of comical point just on valuation, because I think that's important to people, especially the haters. This is the biggest company on the planet, and the next 12-month growth clip is 40% EPS. It's like, how can anyone be upset? Has that ever
Yeah.
happened before? But if you sort of look at the sort of basic PE, which I'm not a huge fan on, but just 12-month forward at 33% on 40 growth doesn't sound 33 times on 40 growth doesn't sound terrible, especially when you look at the 5-year average of 38, and then 24 forward PE rolling is about 27 on a 5-year average of 33. So good numbers. Analysts, I looked this morning, upgraded right after these numbers, despite this sort of weird negative headline. But they upgraded in the out years, and the out years were always where I had an issue. There's now growing confidence out there, and we've got that 40% handle. So I think we've got like support for the outlook and support for the multiple. Everything looks fine.
That's awesome. I mean, it's interesting you say that, right? Because it's almost like this bifurcation that you have to, and this happens in the markets all the time, especially, but like you get this, you lose the forest for the trees, right? Where investors are just unhappy with 40% growth year over year. And it's like, you have to be realistic of normalization at some level, and that is still incredible. And the
Right.
fact that you have to bifurcate those two things and understand the what's ahead from a long term perspective, and how we should be looking at that. So I fully agree. That's awesome. I guess is that
But let me just a
yeah,
very quick point, just really to support these calls we've done, and people can go back and audit what we've said over the last sort of year or so, 2 years, I can't remember. You've got to be flexible, right? The problem with being like a hater and a believer something's too expensive, you don't change. You can't change. You need, if you run a thesis like we try to on a sort of 2 to 3 year view on, all the way up and down the stack, supply, demand, an AI roadmap, and you constantly service that, you're not forced to react to sort of short-term incoming data. You can see a long way out. You can keep modifying, and you can remain constructive. And that's really what we try to do with these calls.
sure, yeah, no, fully. Okay, well, stepping away maybe from Nvidia. And putting back in the context of semiconductors from a broad perspective, I guess there are other drivers of demand out there past just the hyperscalers, and I think that's important context for investors looking at the space and looking at SMH, and like where is this demand going to continue to be driven from? So I guess what are your views on that? I know we have sovereign AI, et cetera.
Yeah, so maybe just sort of back up a little bit. So I basically see 3 layers of demand at hyperscalers. So not your question, but I'm going to answer
Sure,
it anyway.
that's okay. You answer your own
There's
questions.
there's internal demand, right? So internal demand is the ability for these cloud service providers to make their own business radically better, right? So that's Meta, incredible. There's external demand, so that's Google Cloud, where, by the way, Google told us a year ago, Sundar Pichai, that the biggest risk to their business was underinvesting, not overinvesting. And then a few weeks ago, he told us they'd underinvested, right? So they're behind the external demand piece, right? And then there's this idea of competition urgency, which is like OpenAI is going for everything, right? So you've got to be ahead of the curve. So like that's do not underestimate the hyperscale thing. It's not slowing down
Sure.
anytime soon. But then elsewhere, you've got this sort of arc up in, yes, sovereign AI. But I think there's also a piece that's starting to become visible, which is the application layer, like the trust-based layer. So, if you're not, a lawyer is never going to use OpenAI or never going to use Google for,
Hopefully not.
AI generated, yeah, whatever, yes, exactly. That kind of thing is turning up. So, a trust-based, very deep verticalized breakout AI is emerging, and again, that's going to be another big demand on compute, like huge demand on compute, which hasn't even sort of made it into models yet. So I think there's still a lot of runway.
Yeah, I think if you think about how deep and wide each of those silos are for maybe industries that are based on objective truth and cannot have, I know we've talked about this a lot, but the chat LLMs that we are, interact with on a daily basis know us very well, right? And they're very nuanced to the individual underlying user, because they need to at some level monetize that at some point. So the better that is, the more monetization you can get. But you're only getting one answer, and you don't have, I know you've said this, but if you Google something, you get 4 blue links, 5 blue links that you can choose from. But this is just giving you one answer, which kind of constrains you in that regard, and you just kind of lean on it as being truthful. But from a perspective of industries that are sustained on objective truth, like medicine or healthcare or legal law, lawyers, et cetera, all of these things, to your point, are these own individual silos that need factual based AI, right? That can't be skewed or subjective in any way. It needs to be based on fact, and et cetera. And I think that's kind of what you're getting at. That there's a.
I mean, I truly, I mean, I believe that all these LLM model companies do well. I don't have a
Yeah.
problem with that. But there is
Yeah.
a reality that there's a fundamental conflict between running a very high subscriber business that's ad rev driven. So it's customer. You've got to have as many customers as possible to monetize ads, with actually giving people the answer that they need rather than the answer they want. So the transactional cost is very low, but actually the transactional cost of giving the wrong answer to a customer who then switches models is exceptionally high. So there's this tension which will probably draw. It's probably sort of the core of why I think there's another layer to go on top.
Yeah. To that point, yes. Zooming out, there's just an example of the application layer that's going to be built on these foundational models that may not be like what we see on a day-to-day basis. But the point being that all of that application layer needs compute, right? And we don't we don't have near enough compute
Yeah,
today to sustain that. So the long tail effect of that is more build out, more infrastructure spend, more data centers, et cetera.
correct.
So that's great. So let's, I guess, tie it back. Let's tie it back to SMH and SMHX. You know, we've continued to talk about how SMH is a team of winners, right? You know, but I think it was interesting you and I were talking about, like, can you dive in a little bit more about like this oligopolies and how that works? Because if you look at the stack of SMH, 25 names, they're the leaders, historically very cyclical, but these guys are not fighting with each other anymore. They're all kind of winning together. And maybe we have new people that are on the call that were not on for the previous ones, but talking about how these companies actually work together, maybe not the construction of the ETF, but how these companies interact together, and how they work together.
Yeah, so it really sort of, I guess it filters down from having the customers, right? So if you have the most customers, right, it's because you probably have the best product now, whether that's Foundry with TSMC or GPUs or ASICs with Broadcom. If you have the most customers and nobody else can get them, it's probably because one, you have the best tech and you've invested the most. And two, your pricing power and scale, right? And you have the customer service piece. So once you've got that, you're very difficult to disrupt because the other guys don't have the money to invest in keeping up with tech like TSMC have done, and you just move further ahead. So it's taken time to shake that through, and to a large extent, AI have accelerated that process. TSMC has nearly 70% global market share of fabs. We know about the fabless side, but that goes all the way down through, Astera to Lam to. So as I say,
Yep.
it's a team of monopoly. So it theoretically and I think practically the risk of that company level cyclicality has reduced dramatically, and that if that's the case, then you should be paying naturally higher multiples for lower volatility, and you've got a much purer play on the long-term structural trend of semiconductors, which, yeah, as it goes back, to the 70s.
Sure.
And because we constrain, or you constrain, because our business constrains SMH into 25 of the largest names, naturally the largest names are the most successful names, and I think my point on the monopolies now is that the winners have an open runway,
Yeah, for
and very
sure.
little competition.
Yeah, and I think we've seen, from a construction standpoint, we've seen a lot of performance, from allowing the winners to run, right, and having a naturally more cap weighted rather than putting, cap limitations on it. It's helped us with tailwind there to allow Nvidia, because if you look, 5-10 years ago, Intel was the top holding, right? Not necessarily the case today. Nvidia is up there, right? But then you get this team of winners where, you've got Nvidia at the top who designs the chips, you've got TSMC who's manufacturing them, you've got ASML who's providing the equipment, you've got Lam who's providing the equipment to TSMC, and really just all the way down cascading. So it's a great point.
Look, I mean, let me make
Yeah,
just one point on that because it just always
yeah,
annoys me. I mean, people counter sell against. I am out talking to clients, helping you guys out, but we get this sort of counter sell point of like, you guys only perform because you've got so much Nvidia. It's like, hold on, whoa. The Nvidia Broadcom positions are an output of our construction methodology. They're not an input. Nobody decided to have large positions there,
yes,
right? The thing was constrained. So, at 25 below that, you start to introduce companies that are losing and more volatile. It's like, why would you do that?
yeah,
It's designed to capture the winners and grow with them. And
yeah.
it just, over time, it's become more powerful rather than less powerful.
Yeah, 100%. I mean, that's what we say, right? Intelligently trying to look forward and construction at the beginning so that we can give the best ride possible for our clients and also the most true pure play exposure to whatever sector it is. So in this case, semiconductors. Um, So we talked about Nvidia, the earnings. I think it's appropriate. We are one day past now today, the 1 year anniversary of the launch of SMHX. So we hit a year. We're at over 100 million in AUM. Has been doing great, but I think it's appropriate to talk about now maybe we'll call it fortuitous timing of our launch, but I would say the intelligently designed, looking at the space, understanding what the strengths of SMH were, or what some of the key driving strengths of SMH were, and that was that fabless factor, right? And the fact that Nvidia was primarily a gaming GPU company 5 years ago, and now they're the leading provider of GPUs for data centers, and then looking at where and how fast AI was moving, these data center build outs, and then what companies or what types of companies within the semiconductor space were going to be the leaders moving forward, right? Or some of the most innovative. And it came to be that just fabless names make the most sense. They have very low CapEx. They're able to invest in R&D, but talk a little bit more. I know on a recent call, we had talked about the fabless space and how they can spend their money and what makes these companies successful. But I thought that was really insightful last time we talked about it. So, just giving your take on the fabless business model and how much freedom and ability it gives them to be innovative.
I mean, I don't think this gets enough base, really, because the fabless business model, first of all, came out of TSMC, right, as a business idea, the ability to only design and then send it to them to tape it out and build it. Fabless is what changed everything, right? If it hadn't been for TSMC, there probably wouldn't be Nvidia the way it is right now. But fabless is just the fabless is just a business model structure, right? If you're
Sure.
it's kind of like biotech. If you're fabless, you don't have to build the machines to build the stuff, right? Somebody else does it for you, which means you can run much leaner. You can hire better people because you can compensate them better, and if you have the better people, you have the better designs. But as the sort of base of AI grows out, right, more solutions are required, and fabless businesses are just solutions businesses, right? They're designing silicon for problems that haven't yet been solved. Now, the apex predators of like Broadcom and Nvidia now are just too big to solve small problems. Now they acquire other businesses. Nvidia did a really interesting tuck-in acquisition relatively recently, which is working well. But at the end of the day, the small guys solve small problems that then become big solutions, and that was what we were going after. And
Yep.
These businesses, a lot of them at sort of lower cap range, will never end up in SMH. So it was kind of frustrating to be out there not being able to. But this is really the other big kind of core opportunity in the semi space that is sort of underappreciated. So you've got monopolies on one side, which sort of is the stack in SMH, but you've also got this idea that just the breadth of demand on semiconductor solutions to help solve anything from, power and optimize power in data centers, optimize data in data centers, to optimize your battery and your Tesla, all that kind of stuff.
Yep. No, I fully agree with that. I think initially maybe people hear fabless and they hear, oh, this is how Nvidia runs their business, that it's a group of companies that are trying to take market share from Nvidia, but that's very difficult to do, right? They have very large moats. The CUDA software is a really big moat, and they are kind of the foundational building block to these data centers. But as these data centers get bigger and bigger and bigger, right, they need to scale, they need to connect more GPUs, and that's where these fabless companies come in, right? And you have said this over and over, but it's optimization. Fabless companies are optimizers, right? They're solving bottlenecks. They're making AI better, faster, more efficient, and they're working alongside the large, data or the racks that go into these data centers, right? And they're helping with interconnectivity, power solutions, all of these different things. So it's important to understand that fabless companies are not necessarily just trying to fight for Nvidia market share. They're working along with it. So same thing that we've talked about with SMH, right? Same idea there. It's again. So we look at it and we get client questions, right? Of how do you allocate to this? How do you look at SMH versus SMHX? And really, yes, there may be a few names, I think 5 to 6 names that overlap, which create a larger portfolio overlap because NVIDIA is large in both of them, but you're getting so many more names down the stack that you just wouldn't, great companies that you wouldn't get access to because of their size in SMH. You're getting the ARMs, you're getting Astera, you're getting key players in the semiconductor space when you access SMHX. So 100%.
Yeah, I mean, I think, the way to think about it is these businesses, because they are innovative, because they're forward-looking, complement each other rather than compete with each other, keeping the whole sort of idea of very tight market share going.
And I would imagine, right, in AI, there's going to be a lot of problems to solve as we continue to
Correct.
scale, right? There's going to be
Correct.
a lot of gaps to hurdle that are going to need solutions that can be fixed by silicon. Okay, so let's just do a quick recap, and then we can kind of adjust to some Q&As. I know we had a couple that came in, but from a large scale takeaway, we believe the AI is a super cycle, multi-year, right? We're still in the midst of the early innings of this. GPUs, ASICs, and other different application-specific chips, memory are all going to exist together. Hyperscaler CapEx is setting the tempo, but it's coming from a lot of different places. And then we have more demand stacked up behind that on the application layer, et cetera. And then, from a positioning perspective, we believe, SMH and SMHX make a lot of sense positioned together inside of a portfolio. So just some quick takeaways, but for Q&A, I guess we'll start with one of the first ones we got from one of the listeners was, is there any companies inside of SMHX that you view as being a key player moving forward for AI? And I know maybe I'll prompt this to you because we talked about Astera, but I thought that was a great answer to that. So maybe giving some context to Astera Labs and what they're doing would be super interesting and make the case for those types of companies.
Yeah. So yeah, I mean, I love it. It's an interesting company. I mean, Astera, fabulous semiconductor, specializes kind of in purpose-built high-speed connectivity solutions. So networking, multiple nodes, power optimization, that kind of stuff. But I think I would point more than anything to like who are its customers, right? Hyperscalers, and Amazon, AWS is one of the biggest, but they also work with AMD, Intel, Nvidia. So this idea of, it's a piece that a specialist can do especially well. And it's a piece that sort of integrates and complements, other guys in the ecosystem as we see it.
Okay, cool. And then I guess, can you still hear me?
Yeah.
Okay. So one of the questions that we get a lot, obviously, is it'll be a two-part question. What underlying risks do you see moving forward for the space that could disrupt this? And I know we just talked about this, but then also on top of that, maybe tying in the China conversation and what your thoughts are around us selling into China, and then what that could mean for Nvidia and semiconductors largely, I guess.
I mean, I would sort of shoot down China as I don't really, sorry, I'm not being aggressive, but
No, it's okay.
It's very difficult to handicap. I just, when I think about like handicapping risk, I think about like two categories, right? Category one is red lights and orange lights, right? So if there's a question mark, I wouldn't go there. And the other category is green lights, right? China is not a green light. It's not even, I don't think it's even necessarily an orange light. But first of all, US policy is now completely incoherent. I have no idea, right, in my mind, whether decisions are made based on national security or tariffs or revenue so literally impossible to tell. And then on the other side of it is, I'm pretty sure China does not want Nvidia, right? At a sort of CCP level, I'm sure the companies around the sort of Chinese AI build out do for now, but China functions best under boundary conditions of urgency, and better to have these guys hungry and pressure on the accelerator makers like Huawei in China than have them sort of kick the crutch away with having Nvidia.
Can could I push back, or not push back, I guess question that too, because I was thinking about this, and like I think everybody agrees that it's very hard to track what's happening from an administrative level on the relationship between us and China, because we're constantly battling for who's the top dog. But recent rhetoric from the administration talking about essentially that we don't give them our best chips. And it was almost like a snub in the face of like saying, sure, you can buy them, but forcing them to, not want to take them because they're, obviously China is, wants to do this on their own. I thought about that a little bit further as like, maybe that was a positional play, because things do move so fast within the AI, and Nvidia is so far ahead of everybody else from a GPU standpoint and a compute standpoint, that if they try to do it on their own, maybe they think we'll be steps ahead, and it's almost better for us. I honestly, I know I maybe took you off.
I mean, my answer is simple. I've literally got no idea. I wouldn't bet on
speculation.
So I'm not being bearish. I'm not being bullish. I'm just saying like it's impossible to tell.
Got it. Understood. Okay. And then I guess anything else that you see as a potential surprise, or you're looking forward to through the end of the year, that could be one of the things that surprises us, right? Because we've kind of laid down what our thoughts are, but anything that might surprise you a little bit more. Is it disruption of CapEx, or is it, is there an underappreciated beneficiary of this CapEx that we didn't see or didn't think about, that's potentially out there?
I'm going to be honest. I mean, I don't think so. Like the story I told about Google, like it's like the Jaws meme, right? We're going to need a bigger boat. I think we'll probably continue to see CapEx click up, because there's also like this game theory piece around it. Like if you're negotiating with Nvidia, who are negotiating with TSMC, and you tell them you want to spend 100 billion, the price is probably going to be higher and the delivery is probably going to be later. So I'm sure there's a lot going on around that, but I just can't. These are big numbers already, but I don't see that tailing off. So I think it's less about what you don't see that people are concerned about, rather than what you do see.
Got it. Okay. I think that's a good place to call it. But I think we went through the questions we had. If there was some questions that we didn't get to, I think we're going to put up a poll. If you'd like to speak with someone from Van Eck, we're happy to go over any questions that you guys have that we weren't able to get to. But again, we appreciate you joining, and look forward to having you on the next call. Thanks again, guys.
Thanks.